What is going on, traders? Welcome back to the Traveling Trader. So today I wanted to discuss why the markets could hit an all-time high soon. What are the four major reasons this week that would contribute to that? And based on that information, based on where the market currently is, what are the top stock plays that I'm looking at right now? What are the top stocks that you can buy right now, or option plays based on where the market is? And there's a hint. All of these stocks that I have up here on this multi-chart screen fall into that category. So let us get right into it, and then I will get into the top stocks to buy right now. So reason number one why the market can hit all-time highs this week. Well, we have a slew of juggernauts, especially in the tech industry, that are reporting earnings this week. Amazon, Apple, Alphabet, otherwise known as Google, AMD, Shopify, Spotify, Facebook, PayPal, and then you have other non-tech blue chip companies like Visa, Starbucks, EA, McDonald's, Pfizer. So you have some really big names that are reporting earnings this week. And a lot of those companies that I just named are actually having really good quarters and really good years. A company like Apple, whose stores have been closed this whole time, can come out and announce that their sales have actually seen an uptick, or at least match what they're used to based on online sales alone. So it's so hard to believe that all of these companies will be reporting earnings and they wouldn't at least have a residual effect on the market, especially since a lot of those companies make up most of the S&P 500. So if you look at the SPY right now, you'll see that we're 5% away from all-time highs. And usually in market crashes, we do go on, in a recovery, we do go on to retest that all-time high before seeing a drawdown or a further continuation. So I find it very hard to believe that those corporate stalwarts can't drag the market another 5% up. Reason number two, Republicans just unveiled a new stimulus plan. Of course, that has to be deliberated and I think agreed upon by the House, but they're looking to extend weekly stimulus benefits through September. Now, the amount that they pay out each week is probably going to be argued, but up until last week, nobody knew what would happen at the end of July when those benefits expired. And during this pandemic-ridden market, we've seen that during the week of stimulus announcements, the market actually melt up some more. Reason number three, there's a Fed meeting this week where they're going to discuss ongoing Fed policies. And what's expected is that the Fed keep the rates as low as they are currently and probably renew their commitment to buy more corporate debt if necessary. And we've seen the market continue upwards during Fed announcements like that. Reason number four why we could see all-time highs in the markets this week, we will finally see the second quarter GDP numbers. Now, this is a complete unknown. I've heard every estimate under the sun, but I think the consensus is that second quarter GDP will be down 30% from where we normally see it. We will also be getting the new unemployment numbers as well, the ones that we've been getting weekly. So if the GDP numbers aren't as bad as expected, and or the unemployment numbers go down, then I think with all of the other factors we discussed, that will contribute to another rally in the market where we could see all-time highs on the S&P. Obviously, NASDAQ has already blew past all-time highs a long time ago. So what are the top stock plays right now? What are the top stock plays that I'm looking at? What are the top option plays that I'm looking at? Well, the strategy really hasn't changed. If you haven't bought the crash or the dip, then the only thing that I think you should be doing is adding blue chips on the retracement. So Tesla, for instance, up another 10% today after dropping to the 21 EMA last week when they dipped, on the day after earnings. If you've been following my channel, you know that the 21 EMA, I call this the great equalizer, especially during rallies. You'll see these blue chip stocks and these tech stocks retrace to the 21 EMA before seeing another rally up. If you take a look at something like Zoom, which is another stock that I think we should be buying on the 21 EMA, which is right now. But you could see that it retraces either to the 21 EMA and or the 50 MA, and that is usually a good buy point for the next rally. And currently we dropped below the 21 EMA, almost tested the 50 moving average, and it was a good re-entry for Zoom. Microsoft, same thing. Microsoft tested the 50 moving average. So last week, right after Microsoft's earnings in our trading group, the number one question is, oh, Microsoft's earnings were so good. Why is it dipping? Well, it gets to dip because sometimes the earnings are priced in, but Microsoft rallied so hard that people started taking profits after the good earnings announcements. So you tend to see it retrace a bit, and it retraced to the 50 MA. And I was saying, instead of complaining as to why Microsoft is dipping, you should be buying the dip. It fell to the central pivot point and the 50-day moving average, which is a really good re-entry for Microsoft, and it's back up above $200 today. And I send all these plays out in the trade alerts. If you want access, link is in the description below. And if you're having trouble with technical analysis, or you want to learn how to trade options or whatever, I do offer one-on-ones. They go really quick. First of every month is usually when they start filling up, because I take a handful of spots and that's it. So if you want to sign up for the one-on-ones, sign up. Link is in the description below on the 1st of August. Or hit me up and ask me about it. Another thing you can do around these earnings, because the options have such high volatility, you can sell things like iron condors, which are neutral strategies. So I took a look at McDonald's, and I couldn't really spot a direction, where I think McDonald's is going to go, if I was bullish or bearish on McDonald's after earnings. And I took a look at its previous earnings and saw that McDonald's is actually a rather stable stock. Obviously, if you look at it in the long term, you'll see that McDonald's, just like every other stock on the US market, just looks like one long uptrend, right? But in the interim, I just could not determine a direction for McDonald's. So essentially what I did was I took a neutral strategy called an iron condor. This is where you sell a call spread and a put spread. And if you look at my iron condor, you'll see here that basically McDonald's has to be between 195 and 205 for me to collect 100% of the profits. This is one of the advantages of dealing with options, is that you can essentially craft or architect your own options trade, and it doesn't even have to have a directional bias. It could be neutral. So I just need I just need McDonald's to expire in that range by this Friday for me to collect 100%. Spotify was another play that we took today. So Spotify, there was some really good premium due to the volatility on Spotify, but basically the trade that I took, I'm bullish on Spotify, and it's another one of these that you can buy off of the 21 EMA here for the long term. It's currently trading above 270, and the 240, 245 put spread was selling for $80 per options contract. So on 10 contracts, that's $800 if Spotify just expires above $245, which I expect it to, unless something unexpected happens and it just starts completely tanking below the moving average here, the 21 EMA. And if you look at what the expected reported earnings per share is, it's negative 0.41. Now, that seems a bit low to me, and I think Spotify will have no problem beating that, just based off of the success of streaming services during the pandemic. And the last expected earnings per share was negative 0.51, and they beat it. They came in at negative 0.22. So I think that they should be able to beat negative 0.41, especially during the pandemic when people are probably streaming even more. But either way, I give myself a pretty good cushion. So Spotify just needs to expire above 245 for me to keep $800 for every 10 options contracts that I sold. And I'll give you one last one, is Apple. So Apple, not only was it giving some really good premiums because of the volatility, the drop here to the 50 MA. So you should essentially be buying companies like Apple when it drops to these major moving averages, but you can also sell put spreads for a lot of premium. And you also see here that the stochastic RSI is oversold on Apple. And like I said, because all of the stores are closed, but Apple still does a lot of online sales, they could come in as a surprise and say, hey, guess what? Even though all of our stores are closed, our sales still were very close to what we normally expect. But as a general rule, with the market this elevated, I would keep cash on hand. I wouldn't buy too much here. You want to wait for the next major correction. If you waited this long, then in my view, you can afford to wait some more. Now, it doesn't mean you can't do swing trades or options trades. That's a different story. I'm just talking about buying a lot of stock here. You know, you can pick your spots with the blue chips, but I wouldn't be committing all of my cash here that I have on hand at this price point. The time to do that was before, during the crash, when everything was discounted. Anyway, that is it for this video. Go ahead and sign up in the link below if you want access to the trade alerts, where I send out all of my stocks, options, crypto trades. Had an insane trade on Bitcoin playing the breakout. We played the breakout of this triangle here, rode it all the way up to 11,400. Silver also doing some crazy things. But sign up if you want access to the trade alerts. Leave a thumbs up if you get anything out of this video. Leave it in the comment section below. Let me know what it is you're trading during this earnings season. And very close in the next couple of videos, I'll be doing another sweepstakes where I'll pick a comment randomly, go all in with that trade. The person that picked on semiconductor, their trade is up about 4%. So if that stands, they'll have at least $40 that I'll owe them. Anyway, stay safe out there, traders. Peace.